Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Wednesday morning edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day yesterday on a very volatile Tuesday, which could lead to a wacky Wednesday. Maybe there's a way I can coin that or do something with that, but I don't know. I'm not so sure. For those of you new to the channel, do me a favor, click that subscribe button down below so that you get the updates when we do post our new videos. Smash that proverbial notification bell or whatever it happens to be. If you're not new to the channel, do me a favor. Give me a like, give me a comment, something. It helps the YouTube algorithms know that humans are actually watching this thing. So let's dive right in. So the S&P yesterday really had a big sell-off, right? We had a huge sell-off on some of the news-driven events from President Trump. And now some of the news-driven events, however, were not such a bad thing for those of us that are that were shorting the market. So yesterday I had talked about, when we do the video, we do it, I did it around 4:30, 4:45, and we had come back up to this area here. And I said, we may get a little reversal out of here, but your better play was to trade the breakdown below this area here. Well, we did come back down, and I said one of the keys was that we got a little bit of basing before the level, and we did. This is the recipe for a breakout. The recipe for a breakout is basing before the level, followed by room to roam, right? So this was the first touch, then we got a second touch, and then we base, and then we got our very strong breakout. Now, in this case, our targets were hit very quickly, and then price continued to run. So depending on how you adjusted and moved your stop would really determine what your results would be on this particular trade. Leave me a comment down below on what you did with this one. So we had the S&P level. The other one that I showed yesterday for a potential breakout was the Russell level. And the Russell also broke down below the level that we were speaking about and really had a very strong sell-off coming back down to its target as well. So both of them had a very, very big sell-off. The Russell, being a little bit more dramatic with a little bit less of a rally back up. But the ES here then came down to an area where I thought we may get a little bit of a bounce. Now, that area where I thought we may get a little bit of a bounce, if you notice, was a dashed line. Now, this is the origin of this move up, which included the gap. And so since this was the origin of the move higher, which included the gap, I said, well, we could get a reversal out of the origin of this move higher. However, I wasn't overly confident with it because this area was kind of a retest of this stuff over here to the left. So we made this a confirmation style entry. Now, anytime you have a confirmation style entry, the rule is you wait for price to get halfway in, and then you take the trade when it comes back out of the level. Well, in this case, price got halfway in, but it never came back out of the level, allowing us to enter the trade, right? Even if I go down to the 1-hour chart, you see that we just blew right through it. So in this case, this level, this is why I like confirmation style entries. There's no reason to get your order filled on that particular trade. So this, we now remove those areas as those levels are no longer valid. Now, looking at this, we still have a small 15-minute level here of a confirmation style entry if price indeed does return to there. Today we have U.S. equity markets that are closed due to, I think it's called a National Day of Mourning for President Bush and his passing. And so the U.S. equity markets are closed. So I don't really anticipate getting down here with those markets being closed. As soon as I'm not exactly sure what time the Globex is going to stop trading, but you can tell that we've really done a whole lot of nothing since the market closed yesterday. We're up a little bit, up a little bit. I say a little bit. We're up 13 points from yesterday's close. But relative to what we actually moved yesterday, that's a very small amount. So it's about a 3% move in the S&P yesterday in general. So for now, what we're looking at is not a whole lot to add to our decisions. We may actually get a gap tomorrow, depending on what happens today in the news cycle. So with what movement we did have, our next level and area for a retracement is this area up here, where we have a little bit of wick over wick movement, an old area of support right through here. I think this would be our next reversal if price does indeed come back up to there, and it very well could. We could just be in that end of the year market now where we get rallies and sideways but I don't want to try to overly predict it. I want to react when it comes into my levels. Same thing in the Nasdaq. So the NQ, we had the same very similar style of a breakdown. In the NQ, we've got a little bit of a potential demand slash support right through here. We'll see if price gets back to this level. But once again, I don't think it's going to get there today. Crude oil. So let's talk about crude. So yesterday in crude, we had started a little bit of a rally up, and I said, well, you may get another shot to go long right here, but I wasn't in love with the level. And I wasn't in love with the area, hence the confirmation style entry, hence no order getting filled, right? If we take a look at this, even on a smaller time frame, we see that price did come into the level, but then go right through it before coming back up, and now that became an area of resistance. So what I'm going to do is remove those lines and that area. Now up here could be a potential reversal level. That was what was the origin of this move down. We could get a potential reversal level up in here. When I look at this on a 4-hour chart, I am still better off, as a buyer. However, we're in a sideways price pattern for a little bit. So you've got a bit more risk when you're in a sideways price pattern always. And so what might make more sense for now is to just look at this as a potential breakdown below $52, right? So kind of keep that $52 number in your head as a potential breakdown area. Next would be gold. So looking here at gold, we have an area that acted as a strong rally higher. And then we sold off from that level. Interestingly enough, that as the markets tanked yesterday and really fell hard, gold also has come down, and gold has really come down in the overnight hours as well. So the rally that we saw in gold nowhere near was as strong as the fall that we saw in the equities markets, which is something that is not typical, right? Typically, you'll see a pretty strong rally in gold, in these market conditions, coupled with the equity collapse, if you will. But did not have that. Didn't have that rally in gold. Really, actually sold off a little bit in gold as the U.S. equity markets fell. Well, the question then would be, well, where did that money go? Well, some of it may have went to bonds. As we saw the bond market really go up. The problem is that we had a trade in place here with the bond market, and so price came into our level and then decided to really just smack us in the mouth before then reversing. However, I'm gonna be okay with that every single time, right? If I get stopped out with I'll take this kind of a loss versus a big gain any day of the week. Right, so the bond market trade definitely blew right through, and so this level is still valid. And if I look at what we're doing with the bonds on a 4-hour chart, we've really had a pretty decent run on the 4-hour chart of the bonds. So now I'm definitely much more of a buyer, and we're coming into some areas that could act as resistance, but in reality, the better levels are going to be the ones below me to get long on a pullback at this point. In the Aussie, we have set up a nice little double top pattern, if you will, there on the Aussie. After the gap up, we double topped through here, which this was I had anticipated a move down happening at some point in the Aussie, but it's one of those deals where it just took a little bit longer for that move down to occur, and it happened I had anticipated the move down, way down in here, however, on some sort of a breakdown out of this level. So the gap finally did get filled. And so now where's my better shot? Well, my better shot when I'm looking at the Aussie would be on some sort of a rally, probably back up into this level. Up in here is a good level structure-wise. However, I don't like the time of day that it was created, right? The time of day that it's created is also important, and that's not a great time of day. This level here looks to be a retest of this over here to the left. So ultimately, I have a level, but it's not until way up here. And it's really, in reality, this whole thing, right? So if you're going to use it, you got to use this whole area because you've got a little bit of basing here, you've got another little level here, and you want to put it above the pivot. So it's a fairly wide zone. And if that's too wide for you, then use the currency pair on a micro or a mini lot in order to minimize your risk. Here is our, here was our trade in the euro. So on our euro trade, we came up and hit our entry. Price then came down to hit the target. For those of you that trade, that are following our trade feed, we've taken our stop. Yesterday I talked about if you got in the euro, moving your stop down to break even. We've now lowered the stop even further. For those of you that were in the trade, that get the access to the private trade feed at tradersarmy.com, you read that we also took some profit off the table. We've hit target 1 and we've hit target 2. And so since we've hit both targets, stop has been moved down to 37.33. Excuse me, 37.33. And so now our final target is down here at 30.33. So looks like we may get a little rollover into there. If you are not short right now, I think that these upper wicks give you an opportunity to get short. And you could even maybe take a breakdown below this area here to run it into this area. Canadian dollar. So the Canadian dollar, also a huge sell-off. Once again, there's some levels up above us, but these are not as crisp, I think, as some of the other currency pairs. And so I'm going to leave this one be because this is the level I found in the Aussie, but it's already been retested. And then I don't really like the time of day for these other levels that were created, especially on a low volume day. I take a little bit more risk, right? Great British Pound, Japanese yen. So in our Great British Pound position, we have hit the area which looks like it could be a potential breakout. However, that breakout has been unable to hold. We hit it, we moved up, and then we came back down into it, and then that was more than 6 candlesticks, right? So if you break out here, you come back up. You didn't technically get stopped out because you're not above the pivot. The pivot's pretty far up there. And we've had more than 6 candlesticks. Technically, you're still not to the pivot. The pivot's way the heck up here, so it may be beyond your risk tolerance depending on your particular style. So at this point, if you did get into it, you're still technically okay. You haven't been stopped out yet, but I would watch your position, accordingly and move your stop very quickly if it comes down to that level. I'm a big believer in if it doesn't make the move in 6 candles, I'm out. In our Japanese yen level, here's our area sitting right here. We still have not gotten back to that particular zone. So any trades we take today in the futures markets are going to be lower probability just due to the fact that the U.S. equity markets are closed. So be aware of that as you go through the day. If you've got any questions, please shoot me an email, support@tradersarmy.com. For those of you that are subscribers to tradersarmy.com, tonight at 7 p.m. Central, we have a live Q&A. You can join our Q&A session. Please make sure that you bring your questions with you. If you're not a subscriber to tradersarmy.com, feel free to go to Traders Army and learn a little bit more about a subscription, and maybe you can join us in our Q&A session tonight. So hope you guys all have a great day, and I will see you tomorrow.